Welcome back, everyone, for deep dive number 5.
Ah,
And wouldn't you know it? It rhymes.
it does.
We've explored the frontiers of tech,
Yes.
debated the nuances of ethics, delved into the environmental landscape, and even charted the turbulent waters of the economic climate.
Yeah.
Today, we're diving into something that ripples through all those areas and impacts everyone: interest rates.
It's the invisible hand guiding so much of our financial world, wouldn't you say?
Absolutely. And to illustrate just how powerful that hand can be, we'll be revisiting our favorite smoothie haven, BrewBliss.
Ah, yes.
Remember them?
Of course.
They've been a recurring character in our deep dives, showing us how real businesses grapple with these complex issues.
BrewBliss is a fantastic case study because they embody the entrepreneurial spirit so many of our listeners share. They've got big dreams, they're taking risks, and they're constantly adapting to a shifting landscape.
Exactly. So let's set the stage. Before we get to BrewBliss's interest rate adventures, we need to make sure everyone's on the same page.
Right.
What exactly are interest rates?
Yeah.
And why should we care? Because let's be honest,
Okay.
they don't exactly scream excitement at first glance.
That's where appearances can be deceiving. Interest rates are like the heartbeat of the financial system. They're the price of money. Plain and simple. When you borrow money, you pay interest to the lender. That's the cost of using their funds. And when you save money, you earn interest. That's the reward for letting someone else use your funds.
Okay, that makes sense.
Yeah.
But why are they constantly changing? It feels like every time I turn around, there's a new headline about interest rates going up or down.
Well, think of interest rates as a giant balancing act.
Okay.
They're influenced by a whole host of factors: inflation, economic growth, government policies, even global events.
Oh, wow.
And in the UK, the Bank of England plays a crucial role by setting the base rate.
Right.
This rate acts like a benchmark, influencing all other interest rates in the economy.
So if the Bank of England decides to raise rates, everyone else kind of falls in line.
Precisely. And that's when things get really interesting for businesses like BrewBliss. Imagine they're planning to open a new branch, expand their menu, or maybe even launch a line of bottled smoothies. All great ideas for a growing business.
Right. Sounds ambitious. But I have a feeling those plans might hit a snag if interest rates start climbing.
You're catching on quickly. Higher interest rates mean borrowing becomes more expensive. That loan BrewBliss needs to fuel their expansion suddenly becomes a much heavier financial burden. And it's not just BrewBliss. Higher rates impact everyone, from large corporations to small businesses, and even individual consumers like you and me.
Hold on. Let's unpack this a bit. You're saying higher interest rates make borrowing more expensive, which puts a damper on business expansion plans? But how does this affect us regular folks? I mean, I'm not exactly planning to open a new smoothie shop anytime soon.
That's where the ripple effect comes in. When businesses like BrewBliss feel the squeeze from higher borrowing costs, they often have to make tough decisions. They might have to delay those expansion plans, cut back on hiring, or even raise prices to offset their increased expenses.
Okay, I see where you're going with this. If BrewBliss has to raise the price of their smoothies, that means I have less money in my pocket for other things.
Exactly. And if you're feeling the pinch, you might start cutting back on those daily smoothie indulgences. Maybe you opt for a smaller size, or you treat yourself less often. And when consumers start tightening their belts, businesses feel the impact.
So it's a domino effect. Higher interest rates put pressure on businesses, which then trickles down to consumers, impacting spending habits and ultimately influencing the entire economy.
Precisely. But here's where things get really fascinating. Remember how we said interest rates are constantly changing, trying to find that sweet spot of economic balance?
Right.
Well, when rates are low, the opposite happens. Borrowing becomes cheaper. Businesses are more likely to invest and expand, and consumers have more money in their pockets to spend.
Okay, so low interest rates are like a green light for growth, both for businesses and consumers.
Exactly. And there's always a but, isn't there?
Oh,
Low interest rates also have their downsides.
I was wondering when the other shoe was going to drop. What's the catch this time?
Well, when interest rates are low, the returns on savings accounts are pretty dismal. You're not exactly going to get rich by parking your money in a traditional savings account. This can discourage saving and potentially lead to excessive borrowing, which can create its own set of problems down the line.
So it's like a balancing act, trying to find that Goldilocks zone where interest rates are stimulating growth but not fueling irresponsible financial behavior.
Precisely. It's a constant dance between encouraging spending and promoting saving, between fueling economic expansion and keeping inflation in check. And it's this complexity that makes understanding interest rates so crucial, especially for businesses like BrewBliss.
Speaking of BrewBliss, You mentioned they've been through some interesting times with interest rate fluctuations. Didn't they face a particularly challenging rate hike back in 2023?
They did indeed. 2023 was a bit of a roller coaster for the global economy, and interest rates took a sharp climb. Many businesses struggled to adapt, but BrewBliss managed to not only survive but thrive in this new environment. And that's what makes their story so compelling. They offer valuable lessons for anyone navigating the turbulent waters of interest rate changes.
Okay, I'm all ears. What did BrewBliss do differently that allowed them to weather the storm? Did they have some secret interest rate defying smoothie recipe?
Well, their smoothies are pretty amazing, but that's not quite their secret weapon. What set BrewBliss apart was their agility and their willingness to embrace creative solutions. They knew they couldn't just sit back and wait for the interest rate storm to pass. They had to adapt their strategies to the new reality.
So they didn't just ride the wave, they learned how to surf it.
Exactly. They looked at their business from every angle and identified areas where they could become more efficient, more resilient, and more appealing to customers in a tighter financial climate.
Give us the specifics. What kind of moves did they make?
One of their first smart moves was taking a closer look at their menu. They realized that while their signature large smoothies were still popular, customers were becoming more price conscious. So they introduced a new line of smaller, more affordable smoothies. This allowed customers to still enjoy their favorite flavors without breaking the bank.
Ah, the classic shrinkflation strategy. But hey, if it keeps those smoothie blenders humming, I guess it's a win-win.
It was a clever way to adapt to changing consumer behavior without compromising on quality. But they didn't stop there. BrewBliss also recognized the importance of customer loyalty in a time when people were being more selective about their spending. So they launched a loyalty program, rewarding their regular customers with discounts and exclusive offers.
Smart move. It's all about incentivizing those repeat customers.
Yeah.
Especially when every penny counts.
Exactly. And they also implemented some savvy behind-the-scenes strategies. They negotiated better deals with their suppliers, streamlined their operations to reduce waste, and even experimented with new, more cost-effective ingredients without sacrificing the quality of their smoothies.
So they were tightening their belts internally while simultaneously appealing to customers' evolving needs and budgets. That's a pretty impressive balancing act.
It really is. But here's the move that really impressed me. They took a proactive approach to managing their savings. They realized that leaving their cash reserves in a low-interest account was essentially losing the money in a high-interest environment.
So what did they do? Did they invest in some risky venture capital fund or try to time the stock market?
Not at all. They made a simple but strategic move. They shifted their savings to a higher-yield fixed deposit account. This allowed them to earn a better return on their money, helping to offset some of those rising borrowing costs.
That's a brilliant strategy. It's like they turned the tables on the interest rate game, using it to their advantage instead of letting it dictate their fate.
Exactly. BrewBliss's story shows us that while interest rates can be a powerful force, they're not an insurmountable obstacle. With a bit of ingenuity, flexibility, and a willingness to adapt, businesses can not only survive periods of economic turbulence, but emerge even stronger.
So what's the key takeaway here for our listeners, many of whom are probably running their own businesses or thinking about starting one?
The most important lesson is that understanding interest rates is crucial for making informed financial decisions. Whether you're planning to take out a loan, invest your savings, or simply manage your day-to-day cash flow, being aware of how interest rates can impact your bottom line can make all the difference.
It's like having a secret weapon in your entrepreneurial arsenal. You can anticipate those financial headwinds and adjust your sales accordingly.
Precisely. And remember, you don't have to navigate these choppy waters alone. There are financial advisors, resources, and even podcasts like this one to help you make sense of the complexities and develop strategies that work for you.
Well said. It's been fascinating diving into the world of interest rates and seeing how they can impact businesses like BrewBliss. It's a reminder that even seemingly dry topics like finance can be full of surprises and valuable lessons.
Absolutely. There's always something new to learn, even for seasoned business owners and finance enthusiasts.
Thanks for joining us on this deep dive into the fascinating world of interest rates. We hope you've gained some valuable insights and maybe even feel a little more empowered to navigate the financial waves.
We hope you've enjoyed the journey as much as we have.
And as always, we want to leave you with a final thought to ponder. How might current interest rate trends impact your own financial decisions in the coming year? Are there any adjustments you might need to make to your spending, saving, or borrowing habits? Food for thought as we head into a brand new year.
It's always a good time to take stock of your financial situation and make sure you're prepared for whatever the economic tides may bring.
A huge shout out to Google Notebook LM for their powerful AI assistance and audio dialogue. You guys make this deep dive
I
possible.
couldn't do it without them.
This episode was a PEELC Strategy production. Until next time, keep exploring, keep learning, and keep diving deep.